This is the Northwest Michigan Real Estate Market Report for January 2015. And the trend for the market in December, which is what the latest data we've got is, and we're seeing some trends into January as well, is that the market is settling a little bit more into a more normal flow. But what's interesting is that the for sale inventory actually is still continuing to reduce, which is unique because it isn't true across the state of Michigan. But that means that it bodes well for sellers going into the year with the inventories a little bit less. So we have some potential positive momentum. And buyer activity, we think, is still pretty strong in the marketplace. The number of homes sold is still steady. The appreciation rates that we're seeing, we look at it in terms of price per square foot, are still rising. If you look at the market segments, you see the under $250,000 market range has got the most activity. And in that price range, again, the same trends. Inventories are declining, but sales activity and price per square foot are rising. If you look at the middle market, the $250,000 to $500,000, those are broken up in sort of two sections. We break them up into the waterfront and non-waterfront. And if you look at the non-waterfront piece, those inventories sort of went for a roller coaster, and the activity was sort of a roller coaster, really based on the weather from last year. And it started off with sales slowing, inventory rising, and then settling down quite a bit. Through the spring, inventory starting to settle, the sales starting to take off. And then this fall, settling back down again. Sales are tapering off a little bit this fall compared to the prior fall. So we're seeing in the non-waterfront $250,000 to $500,000 range, maybe a little settling in the market. In the waterfront segment of $250,000 to $500,000, that really follows almost identically the over $500,000 market, because both of those segments are made up of very similar properties. And in those cases, sales again followed a similar roller coaster ride, except that this fall they've actually picked up in activity. Inventories also are settling back down, so you've got sales rising, inventories sliding. So you'd expect what would happen is the values per square foot are jumping up a little bit, and they are. For the most part, values per square foot have been very steady throughout the year in all price ranges, in that 3 to 4% range. But the waterfront segment and the $500,000 plus segment, the values have jumped a little bit this fall. And that's probably because there's a reduction in inventory and demand is still strong. Going into this year, if you look on a global basis across the country, the economists are projecting that this year will be a stronger year in terms of number of homes sold, and a slower year in terms of appreciation rates in the 3 to 4% range, but also 3 to 4%, as much as even a 7% increase in the number of homes sold. For Northwest Michigan, I don't know if we'll be that optimistic in the terms of number of homes sold rising that much. We actually are probably conservatively thinking that it might slow just a little bit, and a few percentage points. But odds are that we will be pleasantly surprised, particularly come spring. And the odds are that if there is anything different than what we're predicting, it'll be on the positive side. Because we are going into the year with a much stronger, healthier economy than we did in 2014. Equities are up. We've had 3 straight years of strong appreciation, so we have equities up. We have people who pay down their mortgages. So those that have been waiting to sell for a number of years can do that now. And in fact, one of the suggestions that we have is with inventories down right now and demand still strong, typically people wait until spring, particularly in Northwest Michigan. You tend to wait till the spring and summer months. That's the strongest market to put your homes in the market. We suggest that you move that up a little bit and start considering putting your homes in the market now in the winter months, because demand is still there, people are looking, and your competition is less. So there's sort of a unique situation going on with buyer demand being as strong as it is right now, that you might take advantage of it. So this is, in many ways, we're in the spring market. Now, when you look at statistics, if we jump forward into the spring and early summer, you'll look back and it'll probably show that the winter of this year was considerably strong, a big jump in activity. But of course, we're comparing to a very slow winter last year with the weather. So assuming the weather stays constant as it has now, not huge piles of snow, then we think that year over year you can see some great numbers. That's probably going to be a little false rate of how strong the market really is, but the market still is strong. It's stronger, I think, this year than it was at the beginning of last year, as I said before. So we're looking forward to some good activity. For sellers, expect appreciation rates to be but reasonable, 3 to 4%. Expect the inventories to rise a little bit. I think the under 250,000 market is about a 6-month supply of inventory. That still is pretty close to a seller's market, and it'll stay in that 6 to 7% range. The over 250,000 market is probably 11-month supply. In that 11-month number is a lot of vacation homes that are almost a year's supply or more than a year's supply, and then more local homes. So it's an interesting mix in that group. But in general, that'll be a market where if the home is priced right and in good condition, it's going to go in a matter of months. If it isn't, it's going to take multiple months, maybe even a year or more to sell. So that's a more delicate balance on pricing, and it always has been that way, but it's probably a little more exaggerated going into this year than it has in other years. So overall, we're thinking an optimistic view of the market for Northwest Michigan going into this year, and we think it'll be the same, if not better, than last. So we're looking forward to it. Thanks.